Hey, it's Clay, and this will be a video chart on ticker symbol HMNY. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like a few weeks worth of time, it's actually just the past couple of days broken down into 30-minute time slices. I like to do this time frame. I think does a good job of telling the quote-unquote story of the price, and then makes mapping out levels of support and resistance a bit easier to see. These previous lines are from past times I've done the video. But really, what everybody's going to be paying attention to next week and what everything pretty much boils down to is the 18-cent level right here. And by no means am I trying to come across like this is some great discovery on my part. Now, anybody that understands charts, uses charts, is all wondering the same thing and has the same question on their mind as far as this setup is concerned. And that is, what's going to happen with 18 cents? But this also creates a very interesting setup because you look last time the price was down around that 18-cent mark right here. And, not to insult your intelligence, but yeah, a very nice bounce happened. Now, don't get me wrong, and I really wish trading was this easy. Just because last time the price was at 18 cents and went on a huge move does not mean that as soon as it gets down there, it is for sure going to bounce upwards. Now, would it be shocking to see a bounce? No, that would not be shocking at all. However, myself nor anyone else can say that a bounce is for sure happening because for sure's imply guarantees, and there's just no such thing as a guarantee in the market. But as a risk versus reward, as kind of a logical place to say, hey, I wonder if it'll bounce from there, yeah, it at least makes sense to bring about the question and keep an eye on it. So if you haven't kind of connected those dots yet, 18 cents is a very important level from not only a trading perspective, but also just kind of a general storybook perspective, if you will. Because from the story perspective, if the price does drop below there, then that's literally putting the price at all-time lows, and that would just be, further confirmation that the bears are just absolutely owning on this chart. As far as levels of resistance are concerned, the key level with any sort of bounce is going to be that purple line right there, which is the 50-period simple moving average. So, like I said, if the price does bounce, keep an eye on that, and, that'll be the key battleground. But top priority right now is not necessarily breaking resistance levels. It's all about whether or not that 18-cent mark can hold, so we shall see. But next week should be pretty interesting. One of the biggest questions I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.